House prices started rising again last March after 10 rate hikes, which is surprising enough. But then the national median price kept rising, past the previous peak, to be 45% more than at the beginning of 2019. Now, over the same period, consumer prices have increased 20% and the average weekly wage by 17%. The latest data for June, out this morning, show a rise of 0.7% for the month and 8% for the year. But talk of a national housing market is pretty meaningless, really. The differences between cities are so great, it's clear that each is a market of its own. For the financial year, the range is from minus 0.1% in Hobart to an astounding 23.6% in Perth. In between, there's Brisbane and Adelaide up about 15%, Sydney 6.3%, Darwin and Canberra just above 2% each, and Melbourne bringing up the mainland rear with a rise of 1.3%. Speaking of the financial year, here's a chart of the share market All Ordinaries Index for the year, and it was a year of three parts. Correction in the first 4 months, rally in the next 4 months, and then sideways in the final 4. The capital gain for the year was 4.4%. Total return, including dividends, about 11.9%. As I mentioned, the housing capital gain was 8% for the year. Total return, including rents, 12.2%. So bricks and mortar wins on both counts. For the first day of the new year, the market lost 0.3%, with falls by banks and retailers, gains by mining stocks because iron ore and base metals went up on commodity markets. The US market fell on Friday, with Nike down 20% after just doing a bad trading update, and the Aussie dollar stayed at 66.7 US cents. And that's finance.